Eric Johnson, former economist from Deutsche Bank, is still bearish, and he brings up good points.
Why are you still bearish here?
Thanks for having me. So I think the fundamental backdrop is still quite negative. Right now the market's trading, for example, at 20 times earnings, and the earnings yield is actually less than the money market yield. The last time we saw that happen was in 1999 and in 2001.
The fundamentals are indeed worse than what the market portrays. Most of the major tech and S&P companies have negative year-over-year earnings growth. In addition to the high interest rate, it just does not make sense where these companies are now priced.
So what we think could damage it would be, one of them is earnings. So earnings have been a beneficiary of inflation. It's been very clear for the last 2 years, and it's actually been very clear for the last 10, 20 years, where sales are moving with inflation. Equities are they're not priced in real terms, they're priced in nominal terms. So they have benefited from inflation. As inflation comes down, that is going to be a headwind for earnings growth. And in terms of the economy, if you look at some of the potential catalysts for the economy ahead, because I think ultimately it's a weak economy that's going to bring down the market. It's not going to be the Fed, it's not going to be policy. It's ultimately going to be a weak economy. And we have the student loan moratorium that ends in 2 months. We have the excess savings, which are still high, but go down by the day, and a bunch of other factors like that I think are going to hit the economy. So Eric, the question you have to ask yourself for anyone is, does it make sense to pay 20 times earnings for stock prices? So if you look back historically, has that been a good strategy to do that? My second question would be, is it a good strategy to buy the market when the unemployment rate is at 3.6%, meaning full employment? Is it a good strategy to buy stocks when earnings estimates really have very little upside and potentially have downside?
Johnson brought up an amazing point. It seems like he is saying that the market may be at its peak with record low unemployment, 20 times earnings priced in, and maxed out earnings estimates. I would love to know what you think in the comments below.